Good morning, friends. This is the daily morning podcast. Today it is 9th of July. I am Devarsh from HDFC Securities. Stocks edged higher with tech heavy Nasdaq scoring another all time record. Our markets are likely to open flat to mildly higher today, following largely positive Asian markets and positive US markets. In US, consumer credit dropped 5.3% on annual basis in May after plunging 20% in April, signaling that US households have been less willing to borrow to make purchases than in the past. Global government borrowing has taken on the opposite trajectory, with investment bank Barclays pointing out that the public debt is on the pace to eclipse World War II records. Pressure on China's manufacturing sector eased in June. Data released yesterday showed that the PPI, reflecting the prices that factories charge to wholesalers for their products, fell 3% year on year in June compared to 3.7% decline in May. China's passenger car sales in June fell 6.5% on a year to 1.68 million units. Back home, the cabinet has approved an agricultural infrastructure fund worth rupees 1 lakh crore, by far government's largest centrally funded program in the farm sector, and green-lighted an affordable rental housing scheme for migrant workers. In corporate news, the government has moved Supreme Court against Delhi High Court's May 5th order in which it allowed Bharti to claim 923 crore refund of excess GST. SBI may invest up to rupees 1,760 crore in Yes Bank FPO. ICICI Bank has approved plans to raise rupees 15,000 crore. TCS is likely to report 2.5% revenue degrowth to rupees 38,965 crore, and net profit may fall 5% QOQ to 7,654 crore in its first quarter FY21 results. Commentary on demand recovery, tech budget normalization, and cost rationalization initiative will be the key monitorables. Net flows into mutual funds that invest in equities dropped more than 95% to 241 crore in June compared to 5,257 crore in May, data published by the MFI showed. Asian stocks are largely up today on hopes of robust economic recovery and as investors looked ahead to earnings season. The Indian indices slipped in the last hour of trade yesterday after 5 days of gain. At the close, Nifty shed 93 points to close at 10,705. Indian Volatility Index snapped 5-day losing streak and ended 4% higher at 26. Technically, the Nifty has shown first sign of weakness yesterday. A move below 10,676 will take the Nifty to next support at 10,553. On the higher side, 10,764 could provide resistance. That is all for the day. Thank you for listening in. For disclaimers, do visit our website www.hdfcsec.com. Have a profitable day ahead.